from Stewart Title. We're very proud to sponsor these events together with Ian Quayle. We call them back to basics, but one of the problems, I think, as we all realise very quickly, is that the basics get more complicated with every year that goes by. So we will be looking at various matters throughout this series, which goes on for the next few months. They are recorded, and we will be sending you a link to recording after each session and a copy of the notes and slides. So hopefully you can then share it with your colleagues, use it as training if you would like to, or use it as onboarding for people joining your teams in the future. As well as supporting efforts like this, Stewart's Title supports the industry in various ways, mainly through our Stewart Solution online ordering platform, which gives you access to over 150 different risks with cover for the most popular policies up to £20 million. The great thing is you are in control. You can get the draft, you can then share it with the appropriate people in transaction, and then actually put it on risk. Policies stay live on the system for 6 months, and you can backdate most policies up to 30 days in case you've had that Friday from hell. More complicated matters, we do have a highly experienced underwriting team, which I was just talking to Ian, we have been adding to this year. So we now, unlike some of our competitors who are cutting back, we've been investing. The reason for that is we want to be able to give you the best service, and the best service often means a speedy response as well as a safe and correct policy. As well as sponsoring these events and monthly forums for residential and commercial property lawyers, we also provide in-house training for you and your teams, and particularly on areas such as regulation related to title insurance. By buying title insurance, you are undertaking insurance activities, and the SRA and CLC do require you to have regular training. So, very happy to talk to you about that. My details are on the slide if you want to get in contact. But with that, Ian, I'll hand over to you. And
thank you, Robert.
Started on the basics.
Thanks very much, and good afternoon, everyone, and welcome to this webinar. Apologies, I have a bit of a sore throat, so apologies for the voice today. A massive thank you to Stewart Title and Robert Kelly for inviting me along to sponsoring these events. Those of you that are familiar with Stewart Title do be aware of the online solution facility, which is really useful. And as Robert was alluding to, the fact that the number of underwriters and staff that Stewart Title have available means that bespoke policies, etc., can be explored quickly. And as Robert mentioned, he can provide training for you and your team on compliance issues. So massive thank you to Stewart Title. Contact details there on slide. This is a back to basics webinar as part of the series, and what we're looking at today is onboarding clients. What I've done on slide here is just indicated some useful websites. The PLA website in particular is really useful. If your firm is a member of the PLA, it's free to access. There's loads of information there, recent case law, barristers' opinions, etc., on a myriad of different topics. So it's well worth a look at. The other sites are sort of leasehold specific. Property Protocols has a brilliant boundary dispute protocol that's worth having a look at if you're dealing with boundary problems. And then finally, I mentioned Property Law UK. This is our monthly electronic subscription service that is sponsored by Stewart Title, and which you can access courtesy of that sponsorship or by subscription. It's really useful sort of monthly publication in electronic form. We've got, I think, over 40 barristers, solicitors and trainers who regularly contribute to it, and the last few editions have exceeded 100 pages in length, so it's quite a bulky document. The aim behind it is to keep you up to date with important cases, important developments with regard to the law. So if you have a chance to have a look at that, if you want details about the subscription service, let me know. I'm not sure, but I think as part of the sponsorship, Stewart Title still have some subscriptions that they can make available to their clients, but talk to Robert about that. So, onboarding clients. The first thing I want to talk about is the retainer and the purpose of the retainer and the importance of the retainer when onboarding a client. So I'm going to deal with this first. I'm then going to talk about assessing risk with regard to the clients and things that we need to do for compliance purposes. But given how important the retainer is in connection with the contractual and tortuous relationship with our clients, it's important that we have a deep dive into the retainer so that we understand what it's meant to do and what is good and bad about what we're currently doing. So the purpose of the retainer is to confirm the relationship that we're going to have with the client. It needs to make sure that we are aware of what the client is proposing with regard to the purchase of the sale of property and what we're going to do in order to ensure that purpose is achieved. I think one of the things that's often overlooked in residential conveyancing transactions is a sort of the point really that's embedded within the idea of knowing your client, and that's this point that I make on slide about clarifying client objective. Why is the client selling the property? Why is the client buying this property? What are we being instructed to do? Or in essence, the questions that we ought to be asking. The next thing that I think is important about the retainer is that in addition to establishing our relationship with the client, it should also provide information, explanation and advice relating to what we're going to be doing. So I think the retainer should set out the conveyancing process, set out our role in the process, indicates to the clients documentation that they can encounter, the purpose of that documentation, what we're going to do with that documentation. And then I think the retainer should also explain what we're going to be advising on. I think all of these things are really important. If we go to the next slide, the importance of the retainer is highlighting the work we're going to do. I think we're all very good at that. Most retainers are brilliant, in fact, in that regard. We should highlight the limitations of the work that we're going to do. And I think also, and this is something that's frequently overlooked, we should be telling clients work that we won't be doing, that the client might expect us to do. I think that's important. And to that end, I've referred to two cases, Harry against Curtis Law, which was an unreported county court decision, and Spire Property against Withers, which was a reported high court decision. Harry and Curtis residential, Spire Property commercial. In both cases, the retainer that had been used by the firm of lawyers involved in connection with commercial and residential conveyancing transactions saved the day with regard to negligence claims that were brought by clients after the transaction had been completed. In both of these cases, the firms concerned had been very careful to specify what they were going to do and also telling the client what they weren't going to do. And it was that point that enabled them to escape liability. So again, if you get a chance to look at these cases, it's really, really useful. Harry against Curtis Law in particular, the client sued in negligence in connection with a failure to give her advice concerning a road that was constructed near to the property she was buying. And Curtis Law made it quite clear in their retainer exactly what they were doing and not doing, and explaining to clients that as the client was paying a very low fee for the conveyancing service, there were aspects of the service that would be below a standard service that Curtis Law could offer if a higher fee were paid. Going on from that then, the retainer should be in writing. If it isn't, or if it is incomplete, the courts are willing to use anything that's said or looking at the course of conduct to determine that the retainer is implied. The courts will be protective of firms who have a very clear retainer such that the client can clearly understand what is being done and not being done. The retainer should include those matters that I referred to a little earlier, namely an explanation of process, an explanation of documentation, an explanation of the work that will be done, explanation of the work that you might think is going to be done but not done. When people ask me about things like that, I think about things like lawyer inspection of the property, things like an inability to advise concerning state and condition of the property, an inability to give advice relating to the commerciality of the transaction. This last bullet point is really important. Watch out for the vague or ambiguous wording. Have a look at your retainer. Ask yourself, if I was a lay client, would I understand what this retainer is touching on? What are the issues it's dealing with? Is there sufficient clarity so that if a client were to argue about what we were saying we're going to do or not do, a court would find in our favour. I think those points are really, really important. Second bullet point on this slide, I think, is really, really important. It's imperative that we manage and monitor the retainer. So it's no good just simply onboarding the client, providing the client with the retainer, asking the client to sign the retainer, and then skipping off into the sunset with regard to the transaction. We've got to make sure that during the life of the transaction, we're not going beyond the retainer, or where we are going beyond the retainer, we're letting the client know how the retainer is being expanded and the consequence of that expansion. So if we've told a client that we're not going to be inspecting the property, and then a boundary issue arises such that we think it's necessary to inspect, we would have to expand the retainer to let the client know that we're undertaking additional work. And we'd have to explain the confines within which that additional work is being undertaken. I think at that juncture, we should also specify to the client the fee that we intend to charge, or the additional fee we intend to charge for the additional work that we're doing. Professional indemnity insurers are worried about retainer creep, specifying in the retainer what we're doing, and then as the transaction progresses, for whatever reason, we go beyond it and we don't document the fact that we've gone beyond it and the scope of what we've done by way of additional work. As far as acting for the seller is concerned, important that the retainer includes it. We'll be considering title, we'll be considering documentation, we'll be preparing contract bundle, etc., setting out in layman's terms exactly what we're going to do, and again indicating to the client what we're not going to do. Same principle with regard to the buyer, although here it's necessary to explain to the client due diligence, what due diligence is, and how that will impact on the client's decision to purchase. We are given within the retainer to provide a number of exclusions. So, I mentioned one already, except in exceptional circumstances, we won't be visiting the property to inspect it. Rather, we'll be relying on the client to carry out an inspection, relying on seller making disclosures, and relying on survey or valuation. We might want to explain to the client that where we receive a survey or valuation to consider, we won't look at any issues within the survey concerning state and condition of the property. We'll only address issues that the surveyor has asked us to address in connection with matters relating to title. If we're dealing with a property that involves a flat or an apartment within a building, to which the Building Safety Act applies, so the building has a status of a relevant building or a higher risk building, again, in the retainer, we should be advising the client that we are unable to verify the height or number of stories of a building. We are unable to verify the status of that building. We're unable to give advice concerning the content of a landlord certificate, and we're able to give advice to the client concerning the contents of the leaseholder deed of certificate insofar as it relates to ownership or occupation as at the 14th of February 2022. Where we're obtaining searches on the client's behalf, the retainer should also explain to the client that we won't be in a position to provide information or advice concerning the content of reports or searches, and that would be necessary to contact the search provider for that information should the need arise. So, retainer, clearly limit the extent of the duty. Be aware that notwithstanding anything we say in the retainer, we are obliged to do two things. One, proffer advice that's reasonably incidental to the task in hand, and advise on all issues that are materially adverse to the interest of the client. In other words, if we have any information that we think the client would need to know about, we're under an obligation, whether the retainer deals with it or not, to tell the client about it. That doesn't mean that you've got to do additional research, etc., sort of unpaid work with regard to the matter. But if anything is drawn to your attention that would be materially adverse to the interest of a reasonable buyer, you're under an obligation to tell the client about it. Where you're aware of a client objective and you're aware of something that is materially adverse to the interests of the client or to achieve that objective, again, same principle applies. You'd be under an obligation to disclose it to the client. I think setting client realistic expectation is so important in the retainer. So, for example, we're not going to be inspecting the property. We're unlikely to be able to identify legal boundaries. We're not going to be advising on state and condition of the property, climate change, environmental issues, etc. The next thing to think about when we're onboarding the client and throughout the conveyancing transaction is this issue of informed consent. The point I'm making here is that a client can only consent to proceed with regard to a conveyancing transaction if they understand the consequences of that consent. A client can only properly authorize us to exchange contracts if they understand what the consequence of an exchange is. A client can only properly authorize us to release a contract prior to exchange if they understand what the consequence of the release of that contract is. The client can only authorize us to proceed with the benefit of a defective title insurance policy. Excuse me. If the client understands what a defective title insurance policy does. We need to be careful that we're feeding information to the client in a manner that the client can digest and in a manner that the client can understand. So I think in those circumstances, we've got the retainer, we've got a report on title. We could drip feed clients information as the transaction progresses, and we could front load the client with information. So I mentioned at the bottom of this slide, the use of third-party resources, RICS Consumer Guide to Survey and Valuation, Leasehold Advisory Service, Do You Know Your Lease, Government Guidance on the Building Safety Act. So when we're onboarding the client, when we're aware of the client objective, when we're aware of the property and the type of property the client is buying, we should think about uploading the client with information at the start of the transaction to aid the client in understanding what transaction involves, what our role is, and what the aims and objectives of due diligence are, for example, in connection with a purchase. There's quite a lot of case law that I mentioned on the slide here. Orient Holdings, Orient Field Holdings against Bird and Bird was an interesting case where solicitors, Bird and Bird, received additional information, additional searches relating to a property that their client was purchasing. And the information within those searches wasn't transmitted to the client. And the court said it should have been. There was information there that was materially adverse to the interests of the client. It should have been disclosed to the client. Moda International and Minkin and Landsberg cases where a retainer was carefully scrutinized by the court to determine liability. So both are indicative of the need to make sure that a retainer is carefully drafted, that the retainer is dispatched to the client, that the client confirms that the retainer has been received, that the retainer has been read, and that the retainer has been understood. AW Group against Taylor Walton was a case where Taylor Walton, acting on behalf of a commercial client, were aware of some planning issues with regard to a site that was being acquired. And what the court said here is you don't have to give detailed planning advice unless you hold yourself out as a planning expert, but you are obliged to tell the client that there's an issue or a risk here associated with planning or lack of planning, and that specialist advice is required. And Inspire Property and Withers is the case I mentioned earlier, this idea about scoping the retainer so the client is quite clear as to what's being done and not being done. So hopefully we've got a retainer, hopefully we've read the retainer, hopefully in the light of what we've said this afternoon, you've had a look at it, you're happy that it fulfills all the tasks that I've just explored, and that if sent to the client would be in no doubt as to what's being done and not being done within the conveyancing process, and would have no doubt what the conveyancing process is, no doubt about the documentation that's going to be encountered, no doubt about, if the client is a buyer, what is going to be undertaken on their behalf with regard to due diligence. The next thing I want to talk about are issues associated with compliance. Compliance is a nightmare for residential conveyancers. Why is it a nightmare? Because compliance issues don't do anything to getting the deal done, getting the transaction over the line, getting to an exchange of contract or completion. As far as compliance is concerned, what we're doing is complying with the general law or complying with our professional obligations. And the reason for that is to ensure that the conveyancing process doesn't harbour sort of criminal activity, or we don't facilitate criminal activity, including money laundering. So it's important that when we're onboarding clients, we comply with everything that is required to be complied with in connection with our professional role, our professional duties, and our professional obligations. So let's just have a look at this for a moment or two. Our firm should have a firm-wide risk assessment with regard to the sorts of work that we're taking on. Now, I've got some bad news for you. If we're undertaking residential conveyancing work, this is an area of work that's deemed high risk from a money laundering perspective. And therefore, unlike some other types of legal activity that our firm might be involved with, we have to take our compliance duties and obligations incredibly seriously. So it's important that you know what your firm-wide risk assessment is with regard to conveyancing transactions. That assessment should take into account the types of client that we act for, client relationships and turnover. So let's just think about these for a moment. Client risk factors. Are we dealing with clients that are known to the firm? We're getting repeat business on a constant basis. Are we dealing with clients that are regularly coming into our office rather than dealing with them virtually? Are we dealing with clients where it's fairly easy to sort of standardize what they've done in the past and their profile and history with our firm? Or is the opposite the case, that we're dealing regularly with new clients that we haven't had a relationship with before, clients that live distance from us and that we're communicating with them virtually, clients that don't have a track record of standard types of transaction that they're regularly undertaking via our firm? So these things need to be taken into account. We are under an obligation to know our clients, and we're going to know our clients in order to enable us to achieve our clients' objective, and also for it to enable us to comply with our compliance obligations. Mentioned on the slide here, two categories of client: politically exposed persons and client in higher risk sectors. We have to be careful about both of these types of client. And even if the transaction is relatively low risk or medium risk, the moment we're dealing with clients in either of these categories, the client itself must be assessed as a higher risk client, and therefore our firm must have policies and procedures to deal with such clients, and those policies or procedures have to be adhered to. Politically exposed clients, the MPs, government ministers, etc., but we could go sort of further down the food chain and things like county councillors, also members of the military, etc., all potentially could be regarded as politically exposed persons. And clients in higher risk sectors, again, clients that have a sort of public persona, clients that earning revenue, earning living or having earned living from high risk sectors, cash intensive businesses, etc., again would be clients deemed to be in a higher risk sector. Again, where we have clients that are not our standard types of client, it may be that, again, because they're non-standard, we're putting them into a higher risk category. So when we talk about clients in higher risk sectors, we're starting a point, our base level is conveyancing is a higher risk activity, and then we're going to look at additional factors that then could increase the risks to the client and risks to our firm. Clients in higher risk jurisdictions, or clients with connections with higher risk jurisdictions. So the client with a Russian bank account, the client with Russian citizenship, a client with a connection with North Korea, a client with business interests in an unusual country, Russia, for example. All of these things would be generating a higher risk relating to the client. Important to understand which jurisdictions across the world are jurisdictions that are high risk. The National Crime Agency has data in that regard, and you as a law firm must keep up to date with what that data is revealing. And you as an individual fee earner must be aware that certain countries and certain citizens of certain countries are higher risk. When we talk about high risk jurisdictions, there's some other issues that are quite interesting, but we'll talk about that in a moment or two. High risk activities in business. As the conveyancing is high risk, our client might be involved in high risk activity, as I've mentioned already, a cash type business. So cash intensive businesses, car washers, hairdressers, barbers, etc., again, will lead to a higher risk assessment with regard to the matter. Geographical risks, jurisdictional risks, clients that have money held in foreign bank accounts, clients that have cryptocurrency accounts, etc., etc., all generate geographical risk. I was doing some research recently with regard to cryptocurrency, and some cryptocurrency wallets are created by companies, some of which have their origins in North Korea, and others have their origins in Russia. So again, clearly there's a jurisdictional risk with regards to those wallets. And then as far as the cryptocurrency itself is concerned, where is the entity that created the currency situated? And again, there are some cryptocurrency funds that originated in Russia. So again, there'd be a jurisdictional and indeed geographical risk in those circumstances. We'll talk about transactional risk, looking at each conveyancing transaction for a client and assessing the risk associated with it. So far, we've talked about the client and factors relating to the client that generate risk. Here, we're talking about the actual transaction itself. So let's just drill down and talk about what sort of transactional risks we could encounter. Number one, the actual transaction itself. Is it the sort of transaction that our client has never done before? Does it have unusual features? Is it not the norm as far as this client's history with our firm is concerned? Next point, who's on the other side of the transaction? Are there risks associated with that? So we're undertaking a conveyancing purchase and we're buying from our client's brother or sister. Well, again, that would generate the potential risk of money laundering, money fraud, etc., mortgage fraud, etc. Other transactional risks where the lawyers acting for the other side are not known to us and not in our region or area. So there's quite a few transactional risks that we need to think about. There could also be transactional risks relating to the quality of title that's being offered or the documentation that's being provided by the seller within the contract bundle. As far as products or high-risk services are concerned, we've then got to again take a step back and look at the bigger picture. So there are high-risk services, including conveyancing. Our client account and the ability for clients to utilize the client account is high risk because our client account could be used as a sort of an informal banking arrangement. We need to think, how are we delivering the services? So are we dealing with clients remotely or are we dealing with clients that we see at our offices? If we are dealing with remote work, are we putting a cap or ceiling on the amount of remote work we're undertaking? And where we are undertaking remote work, what checks and balances are we putting in place to manage the risk associated with dealing with clients at a distance? Who is delivering the services? Again, what's our staff profiling like? What are we doing when we're engaging lawyers to work for us? And what are we doing to manage our lawyers when they are working for us? Are we ensuring that they don't have too large a workload? Are we ensuring that their mental health is in good order? Are we ensuring that there are systems, checks and processes with regard to the conveyancing process and the fee earners activity? We need to think about all of these things. And as a firm, we have to think about it, but as an individual fee earner, we have to be man enough or woman enough to be able to say, well, you know, we're not fulfilling the best of our potential because of, and then managing what because of is, so that we can get back on the good and righteous path, as it were. As far as delivery channel risks are concerned, this is a point that I've just touched on. Who are we acting for? What's our standard type of client? And are we going to meet them or are we going to deal with them virtually? Are we dealing with our clients direct or are we dealing with them via third parties? Here I'm thinking about that Woodward Fisher case that you might have read about, the clothes moth case in central London, where the buyers were so wealthy that they had solicitors, but they also had an intermediary that was liaising between the solicitors and the client. In those circumstances are the key messages with regard to the conveyancing transaction getting through to the clients that we're acting for. That's particularly important when we're acting for clients via third parties. And given the delivery channels that we're using, is that exposing us to risk? So where we're not meeting clients, where we're dealing with clients virtually, there is a greater risk of identity fraud, for example. And if there is a greater risk of identity fraud, what steps or measures are we putting in place to deal with it? So acting for clients we don't meet, could we meet them? Is it feasible or practical? Could we mitigate against additional risks? So in addition to doing electronic verification of the client, we might ask the client as a secondary issue to provide us with copies of documentation, or to show us in a virtual meeting originals of documentation, passports, driving licenses, etc. Should the client always be assessed as higher risk when we're not meeting them? My guess is in a conveyancing transaction that would be a prudent step. Should the client be assessed as low risk when we're not acting for them? I don't think that should ever be the case. And should we perform enhanced due diligence with regard to clients that we don't meet? Well, again, I would say we should bear that in mind. I'm not saying that we automatically do it every time when we're not meeting a client, but it is something in our armory that we should consider, as well as all the other circumstances relating to the transaction. Next thing, it's all well and good having policies, but it's important that fee earners are aware of those policies, and it's also important that those policies are put into place every day for every file. So we need to have clients and fee earners that are aware of risk, aware of what we're doing when we're assessing risk, and aware of the fact that once we've assessed risk, it's still necessary to monitor it going forward. As far as client risk assessments are concerned, it has to be performed when instructions are received, when we're onboarding the client. We have to think about it during the life of the transaction as well. We need to verify client identity before we start work for the client. We need to understand what the client's relationship with our firm is or is going to be, and the purpose of that relationship. In any event, we need to make sure that we've got data or evidence as to source of funds. And again, we've got to, in connection with higher risk transactions or higher risk clients, ensure that we can meet our obligations with regard to checking and verifying sources of wealth. Just dealing with those 2 points for a moment or two, when we talk about sources of funds, it's chasing down the money. So a client says to us that he's going to be paying £50,000 by way of deposit. We need to know where that £50,000 has come from. We need to see the appropriate bank statements. Where the client is saying it's been amassed via savings for the last 5 years, we need to see a savings account to show the money hitting that account. And we're going to probably want to know, if that money is coming in via bank transfer, which bank account is it coming from? As far as sources of wealth are concerned, in connection with higher risk clients, sources of wealth is a really tricky issue. Because what we're looking at there is not where the particular funds are coming from, but are we comfortable that, given the client's lifestyle, given the client's circumstances, given the client's work history, the funds that the client's got is consistent with all that background information. And I think that's quite tricky. There are now companies that will undertake sources of wealth checks on your behalf with regard to clients. I haven't had any experience of it, but I know there are firms out there that are doing it. Wherever we're dealing with sources of funds or sources of wealth, A, we've got to chase the money down. B, we've got to have independent evidence by way of verification. And C, we need to make sure that our file or our case management system is updated so that it shows our exercises that we've undertaken, the work that's done in order to ensure that those exercises are complied with, and the net result or net effect of what we've done. Red flags. Each professional body that I encounter has a series of red flags with regard to money laundering. We'll just go through them. Transactions that are unusual, clients that are unusual, the sort of client that's new to us that wouldn't normally instruct our firm. Third parties that are recommending clients to us that we don't know the personnel sitting behind them, etc. The risks for legal practices are, if we were to fail to recognize a red flag, and a client be involved in money laundering, or a client being subject to some form of fraud, then the fact that we've failed to heed a red flag would potentially lead us liable to any client who's sustained loss in negligence. I make a good point on the slide here that there might be a particular thing during the life of the transaction that would signify a red flag and warrant your notifying your compliance team or compliance officer. But you could also have a situation where a variety of fairly innocuous matters are encountered during the life of the transaction. And each one of those in isolation wouldn't be of any real significance or consequence, but the cumulative effect of a series of them would be. Remember, it's not your job to report criminality to your compliance officer. It's your job to report suspicion. And as far as your compliance officer is concerned, it's not his or her task to report criminality with regard to money laundering. It's again to report suspicion. So the client that tells you he has 8 mobile telephones, is that a normal thing? Answer, no. Is it criminal to have 8 mobile telephones? Definitely not. Is it suspicious? Well, yes. Why on earth would someone have that many mobile telephones? Unless they tell you they've got 8 independent businesses that they need to be communicating with on a regular basis and don't want one phone for that purpose. In isolation, having 8 mobile telephones would be suspicious. The risks for legal practices with regard to non-compliance with red flags or non-alert flowing from the provision of a red flag has all sorts of professional connotations. All the professional bodies, as I mentioned, have different red flags, but there are some common themes mentioned on the slide. Red flags with regard to clients, and not just the client we're acting for, but co-owners, for example, or potential co-owners, where buyer and seller in a residential transaction are family, close family, friends, or that there are existing business relationships between the two, for example. Unusual transactions, the client has bought terrace houses in the Blackburn area for the last 20 years, is now instructing you to buy a penthouse in Knightsbridge. Well, why? The track history that the client has with a firm relates to a sort of standard type of Northwestern transaction. Why is the client now spending £2.5 million on a flat in central London? Lottery wins, sale of business, there might be a whole raft of reasons why this peculiar purchase is being put to us. On the other hand, it might be because of some form of criminality that the client who we've acted for many years is now engaged in, and he's hit the jackpot as a consequence. Unusual circumstances, the client says, for no apparent reason, this transaction needs to be completed urgently. The client that's normally very risk averse is now saying, no, I'm just happy to proceed, don't do any searches, don't worry about anything, I'll take a view. The client who instructs your firm but has no connection with it and lives outside of the area in which your firm is currently in practice. So your firm's in Wolverhampton, a client from Truro instructs you to act in connection with the purchase of a property in Durham City in the northeast of England. Again, there would be unusual circumstances. Unusual sources of funds, I would include cryptocurrency in that category. And the general view seems to be that no conveyancing firm would be willing to act on behalf of a buyer who's buying a property and using cryptocurrency for that purpose. Moving on then, politically exposed persons we've talked about already. Beneficial ownership issues. If we're acting for someone who's acquiring a legal title, are we aware who will own the beneficial interest? Just seen this recently in connection with an online auction. So one of a member of friends or family funding a purchase is going to bid at the auction and become the legal owner of the legal title. But the investors who are funding the purchase are going to acquire a beneficial interest in that property. Who's representing them? If it's your firm representing the person that's been instructed to buy, are you also instructed on behalf of all of those that are contributing towards the funds to facilitate purchase, and thus all of those that are acquiring a beneficial interest? We've already talked about jurisdictional issues. So again, foreign or international clients, funds coming from foreign or international sources would generate a sort of international jurisdiction issue. And again, individuals subject to sanction or countries subject to sanction, again, you shouldn't be acting. And again, as far as sanction exposure is concerned, government website, National Crime Agency website has information about changes to countries that have sanctions imposed on them. Advanced or adverse media issues is a potential problem. So again, as far as acting for a seller or buyer is concerned, if that person has media exposure, could that generate an additional risk as far as the client's activity is concerned? Risk there associated with criminality. Just move on to the next slide. If we see warning signs, we need to be careful about what we do. The first point is, there's a fear, and as a junior member of the conveyancing team, it's not your task to assess risk and decide what you're going to do. Your task would be to report a suspicion to the money laundering reporting officer. Important things: one, you shouldn't be reporting it to anyone else. So if you have concerns, you go to your MLRO or your compliance team and don't talk to anyone else about it. Secondly, you explain the circumstances and explain your suspicion. It then falls to the money laundering reporting officer or the compliance team to decide what to do. The smart move invariably where there's a suspicion is to report. I know some firms don't, on the basis that we know what the police stance will be, and therefore what's the point in notifying when no further action is likely to be taken. I think that's a very dangerous and cavalier attitude to have. I would always report where I have suspicion. And as far as a FINA is concerned, remember, your task is complete when you've notified the MLRO. Not your task to report to the National Crime Agency. And as far as the MLRO is concerned, they're reporting a suspicion. It's the National Crime Agency's task to determine criminality. And if you look at the National Crime Agency's website, they make some very important points. That, you know, your suspicion might lead them to carry out investigation, or might be linked to other information that the National Crime Agency is already holding concerning the individual client concerned. And that original information combined with your suspicion would lead them to ask the police to undertake a criminal investigation, for example. What happens when we get information from a client that's not suspicious but is incomplete? Well, I say in those circumstances, we seek clarification. Where the client is telling us things but not providing us with evidence in support of what he's telling us is, again, suspicious in my view. So we need to think about how we deal with responses that we receive from clients where we are concerned in connection with suspicious activity. The best thing to do is to ask the client to provide proof, documentary proof of what they're saying to you. And then it's a question of assessing any documentation or evidential documentation that's produced by way of proof. Does it answer the question? Does it provide the clarification? Is the documentation an original document? It's not photocopied or anything like that. There's no risk of the documentation being tampered with. Again, would be issues or questions that I would be posing or asking. I talked about client due diligence. When we're onboarding the client, we've got to undertake a client risk assessment. And on slide here, here's what we've got to do. We've got to verify their identity. We can do that via documentation, as long as it's current documentation. We can use that via client electronic verification systems and processes. However, when we've done that, we've got to bear in mind that the client could have hoodwinked whoever has undertaken the appropriate ID assessment before our involvement. So we've got to verify identity via information that the client produces, but also via information that the client is holding or we're holding on file. What does the client do? What's his work or occupation, or her work or occupation? And is that consistent with the funding that is being amassed to pay us, and consistent with the type of property they're buying? Next, why are we being instructed? Why has this client instructed our firm? Why have we been so lucky? Is there a previous relationship with our firm? Is the firm recommended from a third party? If so, who? Or has the client come across us via our website? We need to know, and we need to challenge or question the client with regard to that. What's the client's track record with regard to our firm? Has he instructed or she instructed other members of the firm? And is or could he or she have been so pleased with that service that that's the reason that they've instructed us in connection with this conveyancing matter? What are the risks with regard to the client, with regard to the matter, with regard to third parties involved in the transaction? And what's the level of risk? And is that level of risk likely to fluctuate during the life of the transaction? If we've determined there is risk, what are we going to put in place to manage the risk? So where we've decided we've got a high risk client with a medium risk activity, what are we going to put in place with regard to file management to manage that risk? I think that's an important issue that's often overlooked. So we've got our systems and processes, we're very good at that. We've got everything that we need to have with regard to the process, but then are we putting processes into practice, and is there evidence of that on file? It's important that we are recording findings and decisions, or where we are reassessing risk, there's a note that a reassessment has occurred and the consequences of that reassessment. So recording findings and decisions is really important. As far as enhanced due diligence is concerned, necessary where we're dealing with high-risk third countries, where we're dealing with politically exposed persons, or other situations, or where enhanced due diligence is required. Again, in these circumstances, in addition to the initial risk assessment, it's necessary to perform ongoing assessments. In a conveyancing transaction, that's likely to be before exchange of contract and before or after we've received funds from a client. So again, we just assess risk at that point in time and say, has anything altered since when we first onboarded the client? As far as simplified due diligence is concerned, I would have to say it'd be quite unusual in a conveyancing transaction for simplified due diligence to be appropriate, given the complexities and risks associated with residential conveyancing generally. But if we are deciding that a transaction or a client is low risk, then what we've got to do in those circumstances is keep the risk assessment under review. Is anything happening during the life of the transaction that means the risk has increased? As far as matter risk assessments are concerned, again, we've covered off most of these. Again, we're going to monitor the matter, look at it when we're taking it on board, monitor it during the life of the transaction, and record findings and decisions. So how is the original level of risk arrived at? And on review, what are we doing? Are we saying that we're maintaining that level? Are we leveling down or up? And if we are leveling down or up, why have we taken that decision? So with regard to matter risk assessments, the only features in the matter which may represent higher risk is the matter a complex one, is the matter being undertaken at short notice, are the steps involved high volume? Does the matter involve new sources of finance, particularly anything that's unregulated? So here we're looking at the transaction, the nature of the transaction, the parties to the transaction, the timings relating to the transaction. Sources of funds checks are necessary courtesy of Section 327 of the Proceeds of Crime Act. Person commits a criminal offence if they conceal, disguise, convert or transfer criminal property or remove criminal property from the UK. The important point here is the conveyancing process potentially allows offences under Section 327 to be committed. So the conversion of cash into a client account to facilitate the purchase of a property has the potential to be a 327 offence. The non-disclosure of fact has amounted to committing of this same offence, courtesy of this case of Clark against the Scander back in 1984. Remember, sources of funds and sources of wealth are two different things. Funds, the funds for the particular purchase, where do they come from? Sources of wealth, a bigger exploration, a macro position with regard to the client. With the information that we've got about this client, are we happy that this sort of client with this sort of background, with this sort of work history, is in a position to fund this type of transaction. Here we're going to look at the origin of all money that has been accumulated over a lifetime. So what work has he done? Has there been professional activity that would generate income? Has there been some form of windfall? Has there been an inheritance? Have assets been sold to realize cash? We need as much information as possible, and again, we need to have a paper trail with regard to documentation, with regard to what we're being told, with regard to sources of wealth. We need to think about mitigation of risk with higher risk clients. So as I mentioned, doing internet-based research on higher risk clients, probing them, obtaining evidence and documents relating to sources of wealth, not just sources of funds. And again, there are companies now that will perform sort of an exercise with regard to clients to identify history, etc., so that you've got information to back up conclusions that have been raised or made with regard to sources of wealth. Ongoing risk assessments are mandatory. When are they appropriate? Well, whenever you think there's been a change in circumstance or new information disclosed to you. As far as client due diligence is concerned, again, it's mandatory. It's important when we're onboarding the client, and it's important that we consider reviewing the risk profile and updating the risk profile whenever necessary. So what I've done here is given you some scenarios to have a look at. Not going to look at them now, it's a little bit of homework for you to have a look at. But what you're doing here is you're looking at, well, let's just look at this one, Mr. and Mrs. Jones. Clients live in the office, near your office, always attend your office in the past to discuss matters, now instructed you to buy an investment property, they're funding the property from savings, and Mr. Jones has instructed your commercial department with two others to create a company and to set up the constitution of the company and to protect the interests of investors, etc. There's lots of issues there with regards to matter risk assessment, client risk assessment, etc. Some factors, the fact that the client lives close to the office and attends your office in person, might be an indicator of lower risk. The residential conveyancing transaction might push that towards higher risk. The fact that they have instructed your firm in the past, but not in connection with buy-to-let investment property, might put them at a higher risk than the new business activity that Mr. Jones is proposing. Well, given the fact you've got third-party funding going in there, that's probably going to be high risk as well. Next one, again, county councillor and a partner generating income from TikTok shop and eBay account. Well, again, there you've got Mary Crow generating cash via business, and John Diss is potentially a politically exposed person. And then you've got Mary Crow, who has an international element to the transaction, and she's getting or providing funding for the clients in connection with work that she's done from a Malaysian royalty member who's providing funds in connection with a deposit relating to an instruction to Mary Crow with regard to a sculpture piece. Again, the money's coming from Malaysia. We've got to trace the money. We've got to be able to prove that this is genuine. Might be an interesting debate here. You know, has Mary Crow paid tax on the fee that she's received by way of deposit for her commission? Just moving on a little further, if I can. New client Julie Smith. No fixed abode. No ability to receive emails. Doesn't have a valid driving license or passport, no access to the internet for a virtual meeting. Well, again, if you turn up at a conference and that client then turns up, that would be indicating that perhaps all is not as has been put to you. Does it matter what she's instructing the firm to do? Well, yes, it is, because you've got to do an assessment with regard to a transaction. If this was a conveyancing transaction, I would immediately say that what her background is would suggest high risk. There's another one you can have a look at. £3 million from cryptocurrency. In my view, you know, currently you couldn't act. National Crime Agency saying, given the problems with cryptocurrency, can't act. If you were to act, what you'd have to do is ask the client where the funds came that were used to invest in the cryptocurrency in the first place. Have those funds increased in value as a consequence of being invested in cryptocurrency? And if so, can we prove how that value has increased? And what's happening when the money is being extracted from the cryptocurrency? It's going into a crypto wallet. But what's the company sitting behind that crypto wallet? And there's another one, Isle of Man Trust Fund. And again, the client's refusing to provide bank statements. Is that suspicious? Well, in my view, yes. If the money's coming from a genuine source, then there shouldn't be any problem from a client meeting your request for proof of funds. So when we assess risk, what have we got to do? What we've got to do is we've got to determine what the risk is. With regards to source of funds, we've got to chase the money. And about source of wealth, we've got to get a bigger picture relating to the background of the owner of the property or the client. On the slide, undue influence and conflicts of interest. Again, we've just got to be aware of the potential for undue influence and conflicts of interest. So these are problems because of the risk of negligence, because of breach of contract claims, and because of the risk of professional misconduct. Undue influence, when we're onboarding clients, who are the clients? Are the clients elderly and infirm? If they are, what measures can we put in place to check that they have the appropriate capacity to instruct us? Where we're receiving instruction from co-owners, is there a risk of undue influences between co-owners? Other types of transaction, are there risks associated with the instructions that we're receiving? The answer to those questions is an emphatic yes. What is undue influence? Well, pressure exerted so as to overpower the volition of a party without convincing the judgment will constitute undue influence. What is undue influence? Well, again, some recent case law. Daniel and Drew, lack of free will. Whether or not the persuasion or the advice, in other words, the influence, has invaded the free volition of the donor. Quite a lot of case law on it, including Royal Bank of Scotland against Ettridge. Overt acts of improper pressure or coercion. A relationship where one has acquired a position over another. Ascendancy of which the ascendant person takes unfair advantage. These are all standard definitions. We've got to meet clients, we've got to make an assessment with regard to their capacity, assessment with regard to risk of undue influence. There is a presumption of undue influence, but that doesn't apply to co-owners or husband and wife. You'd have to actually identify actual undue influence in those circumstances. What do we do if we perceive risk? Tell clients to get individual legal advice, consider all relevant information and risks, make sure collective clients are being candid with one another as well as your firm, and have the clients, are the clients in a position to make a free and full informed decision to proceed with regard to a transaction. We need to assess risks. Who are they? And we've got to be particularly careful about mortgage and remortgage transactions, as we can see in recent cases. Nature Resource against First Citizens Bank, and the case of, which I'm just going to show you now, this case, Warren Edwards against One Savings. In this case, where one party was using some of remortgage funds for his own purposes to discharge a debt, that led to a presumption of undue influence, which was binding on the bank in this particular case. Quite an interesting case for you to look at. I've done on there a little diagram showing you about how undue influence should be assessed. And when dealing with undue influence, these are important points. Knowing your client, making sure clients are being candid with you and each other, and being candid with regard to any lender that's funding the transaction. We've got to watch out for conflicts of interest as between our clients and between our firm. Boardman and Phipps is the appropriate authority. Law Society Practice Note 2023 on this issue. Systems and controls to prevent conflicts of this arising. Conflict checking when you're taking clients on board is the key. In conveyancing transactions, I would always say acting for the seller and buyer is dangerous. The risk of conflict of interest increases dramatically in those circumstances. Best practice has to be don't do it. talked about that. We talked about that. I'm just conscious of time. The general position where a conflict of interest arises is you can't act with either party. And we have to watch out for client confidentiality with regard to clients. So things to look out for: undue influence, conflicts of interest, breaches of client confidentiality, and issues associated with mortgage fraud. I'm conscious that I've overrun. What I'd like to do to finish is to say, if you have any questions or queries, fire away via the points that are raised there. I'm also going to open up the chat box to see if there are any questions or queries. So we'll just have a look at that and then we'll finish. Stephen is saying we do have some free subscriptions for Property Law UK, so please get in touch with Robert Kelly. I'm sure he will organise that for you. But if we don't have any questions in the chat facility, all that's left for me to do is to first of all thank Stewart Title for inviting me along today, to apologise to you. I've got a really bad cold, really bad throat, so I apologise for that. Robert, anything to add?
I was going to say there is a question in the question box.
Right, we'll have a look at that. Sorry.
How far do you need to go back to verify source of fund and wealth and funds?
Yeah, well, it depends on the risk profile of the client. Let's assume it's a client that says I've got £50,000 worth of savings, and what I've done is for the last 10 years I've saved £500 a month. What I'd be doing is I would be saying, right, well, let's have a look at the current bank statement, the current wage slip to show income coming in and part of that money being diverted into savings. If the client says he's done that for the last 10 years, I probably want to see another statement, another sort of pay slip going back to 2024, say March, February 2024, and go back, say, 3 years and do the same exercise. If it was a client, new client I'd never met before and high risk, I'd want to see right at the beginning the account being opened and proof, certainly every 6 months, of the total increasing to substantiate what the client is saying, Robert. That's how I would deal with it. Any other questions, Robert?
No, that's all the ones we've got in here at the moment, but thank you for answering that one.
Brilliant, no problem at all. Thank you for attending this. It's the first in the series. I hope it's been of use to you. There are notes that accompany the presentation. The slides will be made available to you. And do have a look. If Stewart Title are able to offer you a subscription to Property Law UK, it's well worth contacting Robert and getting that organised. But on that note, Robert, thank you very much indeed for your assistance. Thank you, everyone, for attending today. Enjoy the rest of the day, and thank you for your time, everyone. Thanks very much. Bye-bye.